Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming your way with the market recap for the 9th. We are on a Wednesday. We did have some technical difficulties with our platform a little earlier in the day, but we are ready to rock and roll here today in the recap. So welcome, everybody. Hope everybody had a great day trading. Definitely another gap on the open and just kind of drift day in the market as a whole. We are starting to approach some pretty round numbers. The S&P getting very, very close to 2,600 on the intraday. Sold off a little bit before it got there, but we're approaching those big round numbers we've been kind of keeping an eye on that are lining up with some of those old support zones. So should be some interesting end to the week with where we are from a price perspective. Again, here just taking a quick look at the S&P. You can kind of see we had that solid movement in the futures market, giving us a gap on the open. Much like yesterday, sold off a little bit and then just kind of rallied up. Unlike yesterday where we kind of closed near the top of the day, today we closed pretty flat. I don't know if that means a whole lot, but that was the way that it played out. If you look at it more from a daily point of view, again, we are a stone's throw away from 2,600 on the S&P. Of course, that is a zone. I think looking at the round number is the easiest way to go about it, but let's not call it exactly that number, right? So, but we are approaching that old support level, that nice round number, a little bit of a doji action today as we look at it, how it played out on a full day basis. And good afternoon, Abel. Hello, Tiago. Hope you guys are doing well. And hope it was a great day trading for you. Little more, at least one more day of bullish movement, right? I'm really interested in seeing how we respond to these old support zones, these big round numbers that it seems like everybody is watching out for right now. So really we're that close, right? And so to me, just kind of thinking out loud, what does that mean for me? Well, if I have bullish positions, this might be a place that I'm thinking about hedging, taking profits, scaling out, something along those lines because of my read on resistance. Now, you may or may not agree with my read on resistance, and that, of course, is your business. But that's always, something I want to be thinking about with my trades. I'm at resistance or support. Should I do something? Right? Going to be fun. And good afternoon, Justin. Hope all is well, my friend. Good times indeed. And we're only a few trading days away from earnings season, right? We had Constellation Brands come out lowering guidance, another company lowering guidance on for 2019, gap down on the open and really never recovered. We're pretty much done with the big name earnings for this week. But like I said yesterday, we have around 40 give or take S&P companies coming out next week, and then we'll be bombarded with earnings for the rest of the month. So we'll see how that impacts the charts going forward. Over on NASDAQ, same thing, right at that 6,600 mark. Again, it's easiest to go with the round number. That's where our eyes and brains just kind of take us, but it is a zone sitting right below the 50-period moving average as well. So again, these are what I would consider at least profit-taking zones if I were, bullish in the NASDAQ or the market as a whole or whatever. Now, these are areas I'm going to be thinking about taking profits or doing something. So it'll be interesting to see if the market thinks like that as well. Same song and dance over in the Dow Jones. Really close to 24,000. We are knocking on the door of resistance everywhere, right? Definitely going to be up for some challenges. That doesn't mean it can't win, right? It just means that it should be a challenge for us. And hello, Shirley. I hope you're doing well. Good to see you as always. And lastly, over in the Russell, it does kind of continue to maybe show the most strength on the intraday level. Nothing dramatic, but we saw a little more upward movement throughout the day as opposed to our other indexes where we kind of just kind of drifted for much of the afternoon. I don't know what that means. Again, much like our other indexes, though, we are working into that falling 50, this old support zone at around 1450 approximately. So, I mean, we're very, very close. Over the last couple of days, we've known we had a little more room for the bulls to kind of play without dealing with significant overhead, but now we are very, very close. And so definitely going to be something to be keeping an eye on going into tomorrow, going into Friday. Should be a battle. And if it pushes right through, well, then maybe there's more legs to these bulls than some people think. But I will always, of course, as I've said many times, treat resistance as if it's a big deal, treat support as if it's a big deal, because it oftentimes is, right? So there we are in our indexes. Nothing too dramatic, just a little bit closer, knocking on the door of some pretty round numbers, some big, solid old support zone. So we're in an area that might prompt some movement in the near future, or some decision making at least. Over in the sector level, I mean, really for the most part, kind of the status quo, little more drift across the board for the most part. Over here in the material sector, as you can kind of see, another one of those back and forth days as we're working into that 50 period moving average. Still, have some room beyond that. But I think we should always be willing to keep an eye on that. Certainly, our next level is pretty much going to kind of line up with this old support zone. Pretty much, if we extend that out, it's going to take us into this downward trend line. So we do have a little bit more room, assuming we can, take out that 50. But that might present a little bit of a challenge, especially if the market's selling off at resistance. I would expect that it would be if the market ends up selling off. I'm really going out on a limb there, right? That's what the market's done for months now. So no risk taking there for me. I told you I was a wimp. Over in the energy, we saw, of course, crude break 50. And certainly it was a buy signal for those bulls. They definitely bought it when we broke through. We'll take a look at the intraday when we get to the crude section. But over in the energy sector, nice little doji at that old support zone. So it should be an interesting battle in the days to come. Nice solid move. We've seen a great rally in crude, no doubt about it. This isn't maybe a major level of support or resistance now, but it certainly it prompted a major turnaround before, right? And so we definitely have seen some activity off of this price point. Dojied here today, saw quite a few dojis develop in the market here today. For whatever that's worth. And again, it makes sense, if nothing else, indecision. It's one thing if you don't want to go bearish as the indexes are approaching those resistance areas, but you're probably not thinking about buying a whole bunch of new things right at resistance, right? So we'll definitely take a look, Abel, at crude. It was a clean break over there, and it was interesting. 50, we knew 50 was going to be important, whether it acted as resistance or a breakout point. That was really the question, right? And as Abel said, we at least today we know what side won, and it really, what was impressive, and we talked a little bit about it yesterday. We had not really seen any sell signals as we approached 50, knowing that was an area folks were watching. So pretty impressive move over there. Let's see where it takes our energy. Again, pretty extended to the upside. We are, at a price point. We did see some dojing, certainly no confirmation or anything along those lines, in the energy sector. Really very similar situation with our financials. We still have a little room to work to the upside. We do want to probably, and again, for me at least, I think, I'm going to be looking at those major resistance levels on the indexes. So since they're all pretty much right in play right now, it's not like sometimes where there's one and the other ones have already broken through or something. We're a lot of overhead. I'm going to keep that in mind. But individually speaking, over in the financial sector, we continue to push upward ever so slightly as we work through this 24 to 25 range. Not a lot really has changed technically, at least in my opinion, over in the financial sector as a whole here today. Chart looks very, very similar, continuing that upward movement. Good solid movement over in the industrials today. Definitely had a little bit of a kick to them, working through kind of, we saw that doji, and these guys are one of the, in my mind, kind of tougher areas to work with, at least from an ETF level, because there's just so many levels of resistance. You break one and one is right around the corner instead of having some room to potentially run. we don't have a lot of clear room to run, right? It can run however much it wants to, but we certainly were able to take out our first level. We were kind of dojied at that point yesterday. Got an old floor to be keeping an eye on, kind of like the market has, but we are continuing to see some upward movement over there as well. Technology, of course, getting in on the action. Interestingly, did kind of work into these old lows and this old breakout point zone on the intraday, and that is kind of where we saw the profit taking take place over in the technology sector here today. Again, we have room over here. This is a level that I always want to respect resistance, but really I don't think this is a major price point. I think our trend line is going to be the major challenge. And again, I've been wrong many times before. Maybe I'll be wrong again. And if the market starts selling off at resistance, I imagine tech's going down with it. I don't imagine they're going to be the one area that dodges that bullet. But if we continue to see some movement, we do have a little more room before we get into that downward trend line, which probably is going to line up with that 50-period moving average by the time we get there, assuming that we do. So there's potentially a little room left to run over in the tech sector. Over in the staples, we did see a fair amount of selling. They were not able to carry on any of that momentum, at least for today. They did kind of work back into this steep trend line, probably more importantly, this old support or old resistance level, and kind of catch our footing there. But as I've said before, I don't like the way the individual charts look. And I do think that this point right here, being a major, turnaround point and a major breakdown point at $52 approximately, I think that's an important zone. So for me, not really a whole lot has changed. I don't think I would be comfortable looking overall bullish until we're clearly through that. Right or wrong, I still feel that way. And we certainly, at least for today, folks were looking to buy elsewhere, no doubt about it. While this is a very steep trend line, I don't expect that, we're going to see this carry on forever if that trend line is able to hold. If this area does falter, that might be, we might see a little bit more selling. At least those would be my expectations if that's the way it plays out. Our good old boring friends in the utility sector, as they've often been known to do, they move and go nowhere. So we continue to trade within this, this current little mini range that we're working between around 51.50 and 53.50. Pretty good level of support still. So again, like we've kind of talked about before, you could see the, little bit of a bullish bias because of that support, because we're really, if you think about it, pretty sideways overall with these guys. But for me, I'm not really all that interested. Again, I would feel a little differently if we break to the upside, especially if we see some selling in the market, not dramatic selling, because we know utilities can go down like anything else. But if we see some profit taking and maybe some breaking out in the utility sector, that might be something that could be interesting to me. One area, again, this is thinking ahead, we may never get to this point, but one thing I will be watching if and when we do break through that 52.50 is this old trend line to act as a resistance level. We'll follow along. We'll see it happen in real time if that's the way it goes, but you will see that a lot of the times where that old trend line becomes new resistance or support if you're going the other way. So another, eventful yet completely boring day over in the utility sector for sure. And yeah, you're still seeing upward price movement, Shirley. Absolutely. We've not seen a lot of sell signals as a whole across the market just yet. We are at those, like I said, we are looking at some pretty round numbers on our indexes, which might prompt some profit taking. It may or may not, of course, nobody knows for sure. But I would agree with you. We are still kind of seeing that upward movement for the most part. We are seeing up those intraday trends, those intraday upward trends that have, of course, developed over the last week and a half post-Christmas continue to hold up. And the great thing is, as long as we continue to make, hold those intraday trends, we'll continue to move up, right? It's not until we break intraday trends that we start to see some selling. So you're absolutely right. Still things are moving. Maybe it's a little, more of a bull rally than you or I thought on the day after after Christmas. But here we are, all right? No doubt about it. Discretionary, very interesting placement, working right back into, it's been a very impressive run, in my opinion, at least for the discretionary sector. Yes, it's been a good bullish run. Most things have benefited from that bullish run, but we've really seen some nice movement over in the discretionary sector. We are now at what I would consider a pretty easy place to be thinking about taking profits, a potential turnaround zone. Pretty easy to identify trend line that they are working with. And so that is, at least for today, kind of what, halted their progress, if you will. Certainly, we've yet to see sell signals over there by any means, but we are at a price point that could potentially at least act as a resistance zone. Of course, this trend line has been in play before. Very interested, and this is going to be an interesting one, and maybe, at least today, and things change, right? Charts change, over the course of time. But today, this is an area that I'm very interested in. Say we get some selling to close the week off. I'm not talking about dramatic, let's, sell everything and run for the hills like we've seen a few times, right? I won't be surprised if we see that again. But if we see some selling, that's going to trigger some bearish opportunities, maybe some that we'll be interested in, or I'll be interested in. If we're able to catch that higher low and then take out this trend, that might be a little bit of a reversal from a sector point of view. Obviously, that's a lot of ifs, right? We'll follow along, but I wouldn't mind seeing it if we are going to have a little more of an extended rally, a little bit of a pullback, put in a higher pivot, take out that trend line, take out resistance. Really solid, potential trend reversal if all of those things were able to work through. Surely on XLY, it's hard to say for sure right now. So we do have several multi-levels of resistance. I'm guessing that's what you mean on them. I think we're at that one right now around 105, which is just putting us at this trend line here. But then we're going to we've got a lot of history, right? Really up into 112. We've got the 112, we've got the 109, we've got the 106 that we'll have to work with, assuming we break again. The trend suggests we should sell, right? If we just think trend, don't use our brains, just say, hey, we're at the trend line, let's go short. Now, we're obviously not going to do that, right? But that is where we are on the price point. So this is going to be a really interesting area to watch over the next couple of days for sure. So there is surely a fair amount of overhead that these guys have. But, in my opinion, we're at the biggest challenge for them, at least in the shorter term. Over in real estate, really was looking pretty grim earlier in the day. We basically sold all the way back down to this old breakout point. We did rally off of that on the intraday. Go into a 15-minute chart. Not really the kind of follow through you'd like to see on a break. Of course, yesterday we were able to take out that swing high. We did work into it and that did hold. So you do have to respect that from a bullish point of view. Would have liked to see, it carry through that momentum, at least if you're a bull. Hasn't really changed a lot technically though. Really, if you think about it, we have put in those higher lows. We're still holding that higher high, right? They do have, lots of levels above them that we're going to have to deal with, but really not a major level until 32, in my opinion, at least. So there is some room for real estate to run if it wants to. I'm not all that convinced that it wants to. Today's price action, while it didn't do anything wrong, so I'm not going to knock it, I certainly would have appreciated some, oh yeah, hey, real estate broke out yesterday, let's buy it, and not, oh, hey, we pulled back on the intraday, let's buy it. Maybe that's just me, but there is still some room to work with before we get into our next level of resistance over in the real estate sector. So many of those charts are just very unappealing to me from a bullish point of view right now. And over in communication services, much like everything else, kind of stalled out, carried the overall momentum, but really didn't go the extra mile today. No doubt about that. We were able to close above the 50 for the second day in a row, which I'm not mistaken is the first time that might have ever happened on these guys. But really that long-term trend line is where I think we should be looking. So there is still a little room to the upside over in this sector. Although, again, as we've said many times before, this is very reliant on Facebook and Google, very, very much so. So that's always something to keep in mind. But, just as we're looking at the ETF, there is some room until we challenge that resistance level. That's going to be a fun one, because these guys, as I've said many times, have never been able to break swing resistance. Just never happened in their short history. That's going to be interesting to see how it plays out when we, when and if we challenge that price point. So we are seeing a lot of things working into resistance. We saw some dojing today, saw a little more indecision on the intraday, but we certainly have yet to see any, at least what I would consider, sell signals, at least across the board in the market. So keep an eye on those resistance levels. I obviously know I don't need to tell you that, but I will anyway. We're in some decision-making land, or getting very, very close to it, I think, at least. As we shift into our commodities and the dollar, take a quick peek over at the VIX. Of course, the market is still relatively stable. The bulls still are in control of things for the time being. So the VIX is, of course, not spiking yet, right? As we've kind of talked before, some people think the VIX is more useful than others, and it's not, it's fine, whatever you think about it. I don't really have a strong opinion either way. But what I do think is what going to be the, interesting thing if you do follow the VIX is, what does our spike look like when we see the selling? Because again, we all know we don't know if it's going to be at these price points. These are areas that would make sense that we're approaching, but that doesn't mean it has to be there, right, by any stretch of the imagination. But eventually there is going to be some profit taking. What kind of spike do we get, right? Do we simmer down or do we go right back into, oh my goodness, sell before, you never have a chance to again? Thank your lucky stars that we had this rally, and let's get the heck out of here. It should be interesting to see. Dollar really, really struggled here today. Of course, and this one can go a lot of ways. We clearly took out those shadows, right? And a lot of this is going to depend on individual rules. So we, of course, broke that 96 number, of course, on Monday, and triggering a lot of bearish movement for a lot of folks. For other folks, they were eyeballing this, these two shadows here. They did hold us, on the low on Monday as support yesterday. Well, today, however you're viewing it, they're gone, right? So more bearish movement over in the dollar. Realistically speaking, I would expect that we are going to work down into the 200 period moving average over on the DXY. Not any great reason. Yeah, we could whipsaw, and that can, of course, happen, but I'm never going to assume that that's going to happen. The next real, technical catalyst is a little ways away, in the form of that 200 period moving average, at least in my opinion. So I would expect overall to continue to see a little bit of downward movement in the dollar in the shorter term, if nothing else. As we move into the metals, gold, very interesting and very well behaved. I've really appreciated gold since we broke out back here at the end of November. Now, we all recognize this is our first buy signal. And I know many of you guys, were looking or maybe even moving into gold at that price point. I was recognizing it as a signal, but I was, I'm a wimp. I thought that this was the better signal, and again, hindsight, I should have jumped in right there and just dealt with that, right? But, it's been really well behaved ever since. We broke out, we've come to prices that were pretty easy for us to identify from days gone by. We've pulled back to breakout points and rallied up off of them. And over the course of this last week, we've really been playing nicely off of that 1280 break. Of course, we were looking at it as a potential resistance catalyst, and it did very, very short term, but we took it out with relative ease, last week. But it has really developed into a very nice, entry point on the intraday level over the last little while on gold. Nice bounce here today, no doubt about it. Numbers really haven't changed, though. Realistically speaking, that 13 is the big one. Right now, if you're not in gold, I have a hard time thinking today is the day to enter. Although, again, as long as it fits within your design, I have no objection as a whole to people buying into gold right now with its technicals. But I would argue, if you haven't bought gold and you want to buy gold, why at 1294 when, if we can break 13, you don't have to worry about 13. It's not like you have to wait a long time, right? Now, you can, of course, do what you want. It's not my place to tell anybody what to do with their money. I wouldn't want that responsibility. But that's always the way that, I think we think as traders. Well, if we buy it here and it doesn't break 13, we're going to have a hard time, really locking in some profits. A little bit different if it pulls back to 1280 and we pick it up on the intraday or something like that, right? So really not a lot has changed. We're still got a lot of evidence at that 1280 as a support zone. That 1260 is kind of that next level below that. And really any pullback in that area I am comfortable with, as long as it fits my rules, of course. And then a resistance 13. The thing that I love, and whatever we're doing or not doing with gold right now, that's all up for us to decide for ourselves. But the thing I love about gold, clearly the bulls are in control, a lot of momentum behind it, but they're past that 13, and again, approximately 13, nice round even number. We got to get through that one first before we can kind of pick that minimum number, right? There's a lot of room to run. So you're looking at realistically, surely, from anything major, and let's go in and look at a weekly chart just to kind of, maybe hammer this point home. There's not a lot, if we can clearly take out that 13 zone, that 1300 zone, there really, in my opinion, isn't resistance until we approach 1350. That's a lot of room. Now, I wouldn't expect it to go straight up to that price point, although if I go long, I'll hope it does. But I won't expect it to. But from that bullish point of view, 1350 to 1360, just depending on how you want to call it, that's an awful lot of open space. And again, I wouldn't expect it to go straight up, but in all fairness, I didn't expect, once we, took out that 1240 zone that we were going to be testing 13 all that quickly, right? So I'll be happy to be wrong. So that's one thing I love about the gold chart right now. Some things still have to develop for it to play out that way. But if we can break that, there's really, anything can, and maybe new things will develop, of course, between, 1305 or whatever it ends up being and 1360 or thereabouts. But as it is right now, there's just nothing to kind of get in the way of this, upward trend, this bullish momentum that we have. So, we'll definitely continue to follow these on a day-to-day basis. But really, at least in my mind, the numbers are unchanged. Right now, it's 13, it's 1280, it's approximately 1260. Anywhere down in here, I think we can look for a pullback if things develop. We may or may not get that. That will really depend on your trading rules. So surely at 1305, some people might, wait for a close above 13 and then, break that high point, getting in above 13. I think what the most important thing is when you're thinking about breakouts, and that's all that this would be, right, is what are your defined rules? What clearly defines a breakout for you? Is it 10% of an ATR above resistance or below support? Is it one day close above resistance and then, I can move in the next day? In my opinion, that's far more important. As long as it's clearly broke resistance, it's far more important that we have a clear defined, hey, this is in my world, this is how I define a breakout. It has to break 13 and then 10% of an ATR or 50% of an ATR or a one-day close or a 3-day close or a pullback to the breakout point. Break 13, run up, pull back, and then I'll look to enter. I don't know that it matters all that much what your individual rules are over the course of time. I think at least it matters more that you have a very specific design. And I'm glad you brought that up because I'm a big breakout fan personally. That is, just it fits my personality, I guess. And one thing I've seen a lot over the years is traders run into issues, not because they can't identify breakouts or anything like that. It's they're very inconsistent in their approach. So one day you're feeling aggressive, so you move in very early, but you get burned. So the next time you say, well, next time I'm going to make sure I wait. Right, for 2 days or whatever. So, again, I don't know, and I really don't think, and who knows for sure, but I don't think it matters. As long as what you're doing is repeatable and clearly a breakout, I think you're good. You just have to take the good with the bad. In any breakout trading system, you get in early, you have to deal with more fake outs. If you wait for more confirmation, you miss out on more opportunities. there's no magical answer, right, for the breakout. So, whether, really, again, I don't really think it matters as long as you're comfortable with it. It's clearly defined within your system, so you know exactly what your definition of a breakout is. Because the only thing that we have to have in common is, yes, it did break resistance, right? Because that's true for all of us. This was a break of resistance. Whether or not it was enough of a break for me to buy, it wasn't. But it might have been enough of a break for Able to buy. Might have been enough of a break for Coach Tim to buy. It just wasn't enough of a break for me to buy, right? And that's okay. We just want to make sure we have clear, defined rules when it comes to identifying, breaks of support or resistance, at least in my opinion, because that's usually where folks get into the most trouble. They're always chasing. This one, I missed this one, so I'll go aggressive next time. Whoops, I shouldn't have been aggressive. It just has a weird way of working out the wrong way if you're not consistent in your approach. So I'm glad you brought that up. Definitely something that I think all of us should be thinking a lot about if we don't have a very clearly defined set of trading rules for our breakout trades, because that's what I love so much about breakouts. We can plan them ahead of time. Well, if all I need to see is gold to break 13. When or if it happens, only time will tell. But I can now know that I need it to close above 13. If it does, I'm looking to buy, GLD, or I'm going to play the contract, or I'm going to sell, a naked put on the futures contract, or whatever it might be. We can plan out so much ahead of time. That's one reason why I like them so much. We can think about exactly how it should play out, how we want to play it. And then it's just a matter of being a fisherman and sitting by the water until the fish bites. And maybe that's why it is. I've always been a fisherman, and that's how I always think about breakout trading. Really very similar spot going on with our silver. Maybe not quite as pretty of a chart just yet. I think it was when we broke 15, and it can shake itself out. It's by no means an ugly chart, at least to me it's not. But we're really seeing a very similar situation develop, not quite as clearly defined. On gold, we have a really good idea of kind of where that first level at 1280 is as an intraday support zone. With the silver, we haven't quite, I don't think at least set that up just yet. So I do think we're still waiting for some better signals. 16, the big number, again, much like gold, a break of 16, I would consider a buy signal. And much like gold, taking out 16, we have some room to run right into the 1720, 1730 ballpark if and when we can break through that 16. So these metals are been very strong. And, for me, at least, one reason I like them, they've been pretty well behaved, which is always a nice thing. But they have room, right? And they've had room each phase of the way for the most part. If it breaks here, the next level is there. And there was room, at least in theory, enough for us to potentially take some trading opportunities. So we continue to look pretty strong overall in there, but just still got some big numbers on top of us. Maybe some pullback opportunities will develop. Maybe it'll work out being a breakout opportunity. We will have to wait and see. Speaking of waiting and seeing, much to my heart's delight, nothing happened in natural gas today. And this is exactly what I want to happen. I still need time. I really do. Right now, I think you could make a case that a break to the downside is a short-term sell signal. A break to this, highs that we've now dealt with on the intraday. Well, maybe we'll go to an hourly chart here to kind of illustrate that point. I think you could argue that you have signals, short-term signals. Either way it decides to break. I would argue with the volatility that it's been experiencing, especially its gappy nature on the weekend open, I would not, if that were to happen tomorrow, I don't think I would feel comfortable trading it whichever way it broke. But if we can drag this into another week and a half, and again, as I said yesterday and many times, as I've been trying to project potential trading opportunities on natural gas, I'm not going to hold my breath. Volatility is not gone yet, although we have started to see it die down on the, on the ATR. We have seen it just take 5 at least over the last several trading days. We are definitely in a range right now. For me, again, it breaks that range tomorrow. I'm not really interested in it. If we can go range bound for another week and we're having this conversation next Thursday or, a week from Monday, maybe I would feel comfortable with that. So yeah, I'm not going to hold my breath, but I will ask, of course, and hope. So sooner or later, and that's what's great about trading, like Abel says, slow and steady. Sooner or later, natural gas is going to give each one of us a trade setup that we love. May not be the exact setup, may not be anytime soon, but it will happen because it always does, right? And it just takes a minute to look at natural gas and say, yeah, this isn't what I'm looking for. See you tomorrow, right? And as long as we do that, one of these days, oh, wow, did you see natural gas? So that's why I'm always kind of going through this, this process as I'm going over my own watch lists, at least. I think it's a good exercise. Lastly, over in crude. Very clean break of 50. Of course, we've all been eyeballing $50. We were watching it as a potential resistance catalyst for sure. I know I was watching it for that price point, but we also knew that bulls were watching it as a potential breakout point too, right? So as we kind of talked about before, we always try to put the other side's hat on, right? Why would somebody buy at 49.80? I don't know why they would, but why would someone buy at 50.20? Well, that would potentially fit their breakout rules, right? And so we did see some nice movement once we took 50 out. The nice thing about it is, and this could have, if this was how it was going to always meant to be to play out, I have to say thank you to it because it never gave us any sell signals, right? So I was certainly, and I wasn't really, was too secretive about it, looking for it to retrace into 50 or for a potential selling opportunity. It did retrace into 50, but really we never were able to see any sell signals on that. So it did break overnight able. So realistically, if you're thinking about it from a bullish point of view, I guess probably would depend on what you're going to trade. I would just wait. Again, if right now, and again, this is just me, so you don't have to agree with me. But right now, for me, Abel, while I will call this a buy signal, and I really wouldn't fault anybody buying above 50, I think a better entry opportunity is going to be when it works back and tests 50 as a support zone, working all the way potentially up into this, into the high 54s on the bullish side. Right now, I think, I would, if you made me do something with it, I would go bullish today based on the break above 50. But realistically speaking, I would like to see it work into the 50, into this old resistance level and pull back, whether that ended up pulling back and testing 50, or say we ran up to 54 and pulled back to 52 and then broke 54 or this level of resistance. I'd want to see a better signal. But if I were going to want to move into the breakout right now, the problem that I would see buying into a directional play on the breakout on crude right now is it's going to be costly. From a risk to reward point of view at 52 and change, you've got to have a stop loss, below $50. So best case scenario, you're looking at $2.50 a pop. On the risk side of things, a level of resistance, a falling 50, a trend line. So just basically to get that risk to reward. Yeah. I mean, it might feel a little different if we were at 51, Abel, because we could say, because I would still say the stop loss a little bit below 50, resistance still at 54, right? Those numbers would stay the same. Hey, if I buy it at 51 and stop a little bit below 50, bad math person here, risk a little more than $1. If it plays out into resistance, I have a good risk to reward trade, right? At 52, risking 250. If it doesn't break this resistance, I have no risk to reward, and I don't ever really want to put myself in that spot. Much like we kind of saw in gold. And hey, it might run. It's definitely hot right now, and definitely we saw some buyers come in through 50. I'm not ready to change into a bull just yet. But I am, not comfortable. I am much more neutral today. I think you have to respect that break of 50. For me, Abel, what I would like to see is it needs to break here, realistically. Again, if we work our way back over the course of the next week or what have you, into 53, 53.50, into the higher range at $55, where we kind of have this support zone, and then pull back, maybe I'll feel a little bit differently, but it is right now. Basically, the next swing is the trade I would be interested in, Abel, if that makes sense. This swing's going to happen without me. I didn't expect it to push through 50. I was looking for retracement, bearish retracement opportunities that just didn't line up, and that's okay. I'm glad it worked out that way. Didn't cost anything, so no big deal. But basically, for me, whenever I see something like this develop, it's that next trade. A couple days up, pull back to 50, see some signals, maybe it could be something there, work its way back into resistance, pull back, create a higher low, and then take out that resistance. Maybe it could be there. So for me, this will go into a watch. It will go from a you can't buy crude no matter what you want to do, Frank, into maybe, this might be something here. But again, one day break. I mean, it's a bullish signal for sure. I think you have to call it a bullish signal above 50, as we've kind of talked it. We've been watching it work into 50. We just knew how important that number was to both sides, right? Whatever side you found yourself on, potential buyer as a breakout, potential seller as a resistance zone, we all were looking at that number. And yeah, it pushed through. And that's part of the game, like it or not, Abel. And it can be frustrating, but the longer you're around, the more you just deal with it. You hate when things break and you aren't able to get in because they move up too much that day or whatever. But so often, if you just wait a little bit longer, it'll pull back and give you an opportunity. Maybe it is at a higher price point, but it might be at a better entry point anyway, right? That happens a lot too. We just see, well, if I would have just been here in the middle of the night when it broke out, I would have picked it up at 50 and a quarter, made an easy $75, $80 today, and called it a good day, right? So, just continue to monitor it. Know what you want. Know, hey, if you are interested in buying crude, know what you want to see. And maybe you get it, maybe you don't. But you can always ask, right? If you're not interested in buying it, that's okay too. Follow along. Things will potentially change your mind, or potentially some new selling opportunities will develop. So we'll definitely follow along with it. But pretty interesting day in the market, really, for not a whole lot of movement. We are at some pretty major areas, or at least, well, not at, but we're very, very close to some pretty major areas. I think a lot of traders would agree with. So we should be seeing some challenges. Do they take it out like crude did? If we do take out all those support zones on our indexes, probably have some more upward movement in the short term. If it knocks us back down, shouldn't be terribly surprised. So we will see where the next couple of days take us. But with that, ladies and gentlemen, I guess that is going to do us for our market recap today. But as always, it is certainly my pleasure, and I do appreciate everybody's time. And as always, it's good to see you guys. It's always fun to hang out and do this stuff with you. So make sure you are double checking all of those earnings dates for your trades. If you have some existing trades, go in and double check those announcements. If you're making new ones, make sure you double check those announcements. I know you guys are good to do that stuff, but I'm not afraid to harp on it either. So, always a good idea to double check. Like I said, really, we're going to start picking up next week, and then we're going to be bombarded with earnings the rest of the month. So we'll see a lot of earnings throughout the rest of this month for sure. So thank you, Micah and Drew, and welcome, guys. Great to see you guys. First time I've seen your names in the chat, so welcome. We're glad to have you here with us. So with that, ladies and gentlemen, be sure to subscribe to the channel if you are new around here, and hit that notification bell. You can always be alerted to any new videos or live streams that we have over here. And if you do the Twitter thing, be sure to follow us over at Tackle Trading on Twitter as well. We're always trying to put interesting things out there that we're running into during the market hours to share with our team over here. If you enjoyed the market recap, it is always helpful and appreciated if you do give it a thumbs up, just to let us know that it is helpful and to let YouTube know that you like it too. So with that, ladies and gentlemen, get the heck out of here. Have a wonderful afternoon, and I will see you all tomorrow. And hey, Whitney, good to see you, my friend. Happy trading, everybody. Talk to you tomorrow.